In this video, I'm gonna break down 3 mortgage secrets that every first-time homebuyer should know. What's up, everybody? This is your boy Jacques. I'm a licensed realtor and lender in the state of Florida, and my goal on this channel is to teach you different wealth tips and strategies to increase your net worth. So the first mortgage secret is that you can become a first-time homebuyer multiple times in your lifetime. Technically, by definition, to be considered a first-time homebuyer, you cannot have owned or co-owned a resident in the past 3 years. So me personally, I have a lot of people that sold their home about 2-3 years ago, and they're just waiting for that 3-year deadline. And that way, when they reapply to get the first-time homebuyer benefits, they get all the discounts and amenities as a brand new first-time homebuyer. So don't think that you're stuck with being a first-time homebuyer the first time you buy a home. Things do happen. Divorces, you can sell and get a bigger home. Whatever the case may be, I definitely want to share that with you, that you can become a first-time homebuyer multiple times in your lifetime. You don't have to wait. You can still get a mortgage with a credit score of 580. You wouldn't want the rates at that point because they're going to be very high, and you're going to have to put a lot more money down. If you can wait, definitely wait that 3-year period, so that way you get all the benefits and discounts. That way you get all the benefits of a first-time homebuyer, and also that way you have time to bring your credit score up, save the additional money for the down payment and closing costs. If you haven't already, make sure you watch the video that I have above. So I hope that definitely helps, because a lot of people I know think that they can be a first-time homebuyer again. Make sure you share this with your friend and let them know that even if they bought before, they can become a first-time homebuyer again. Now, for the second mortgage secret that you should know as a first-time homebuyer is that you can shop around for different rates while you're being pre-approved. Now, I know what you're gonna say. You're gonna say that you don't want the banks putting a lot of inquiries while you're trying to get pre-approved for a home. So let me break something down for you real quickly. Now look at this credit score wheel right here. If you look, 35% of your credit score is your payment history. 30% is your amount owed on the account. So that's about 65% right there. 10% is new credit. 15% is your length of credit history. And 10% is your credit mix. Nowhere on the screen does it show a big percentage for your inquiries. To be honest, when a bank checks your credit score, it may drop it down maybe 1, 2, or 3 points. It's not a big factor when trying to get a loan. Now, there are a lot of reasons for this misconception. One reason that I find out is when someone's trying to get a car and they go into the dealership, while you're trying to get approved for that car, the dealership actually shotguns your information to 20 or 30 different lenders. So by doing that, there are multiple inquiries when you're trying to get that car. Then that can translate into someone thinking that if they're trying to buy a home, that the same thing happens when it doesn't. And another reason why as well is because each bank that you speak to, they sometimes work on commission. I'm just being honest with you. So that salesperson, of course, is going to try everything in their power, not for you to go check another rate or go to another bank to see if they offer you something better that they can. And you know, guys, I'm all about the facts. Let me show you guys exactly what Experian says on their website regarding this matter. So if you look at the screen, it shows that, however, multiple loan-related inquiries made within a short period of time are either entirely ignored or treated as a single search for credit, thus protecting your credit score. So in my research, I've seen that you have about 30 to 45 days to get different quotes from different banks, and that'll be treated as one inquiry on your credit report. And again, guys, my motto is to always save money. Definitely look at different banks, look at their prices and their rates as well, and compare them. Now, also, just want to let you know that the cheapest is not always the best. You definitely want a contract that's going to close on time, and also make sure that you're going to be supported and taken care of after the fact. Because sometimes you can get a loan, and after you close, they service and sell it to somebody else, and then there's other fees that show up on the back end that you might not be aware of. So definitely look at the bigger picture and not just the rate, because sometimes you can go to a company that has a cheaper rate, but then you pay more in fees and have bad service. And also make sure that you have a strong contract, because this can make or break a deal, especially in the seller's market that we're in right now. So make sure that your pre-approval is strong as possible. And my third and final mortgage secret to tell you guys is that, contrary to what social media tells you, your credit is not the most important thing right now to get pre-approved. It's your income and your debt to income ratio, which is your DTI. Just remember, your credit is a qualifier. It basically tells us if it's a yes or a no if you can get pre-approved. Also, it lets us know what type of interest rate that you'll be getting based off the market average at that time. So technically, the better your score, you can get a better down payment and a better interest rate. Your income and lowering your debt is going to allow you to get a higher pre-approval amount. A lot of people nowadays think that raising up their credit score is going to give them a higher pre-approval, and that's not the case. And let me show you why. Now let me give you guys a quick illustration, or exact numbers, but just want you to understand the gist of everything. So family A makes about $30,000 a year, and they have a 580 credit score with 20% debt. Now family B also makes $30,000 a year, have a 700 credit score with exact same debt percentage. Now they're going to be pre-approved for about the same amount. Now if family B adds a co-signer or makes more money, gets more commission or what have you, they're going to be pre-approved for a higher amount because of their income. So in this market, you definitely want to have the best contract. So definitely knowing these tips will definitely help you in the future when you're trying to get pre-approved. Now I'd love to know, guys, what questions do you have about real estate or the lending side that you want me to break down for you? Make sure you drop those questions in the comment section below. And that's everything, guys. I appreciate you watching this video. As always, make sure you smash that like button. It definitely helps out the channel to help this video go to more people just like yourself that's interested in getting more wealth tips and strategies. Definitely comment and subscribe to the channel if you haven't done so already, and make sure that notification bell is on. I'll definitely see you guys in the next video, and have a wonderful day, guys.